Stop scrolling. If your money is sitting in a traditional savings account right now, you are literally paying that bank to lose your wealth. And no one is talking about the math behind this. Look, you think you're being responsible. You got your paycheck, you put it in a savings account, and you feel safe. But here's the brutal reality: while inflation is moving at light speed, your legacy bank is paying you pennies a year. If you have $5,000 in a standard savings account, you aren't making money, you're losing purchasing power every single second. The system is fundamentally broken, but the fix isn't what you think it is. Today, we are breaking down the absolute best fintech savings ecosystems built specifically for our generation. By the end of this video, you will know exactly where to park your cash to get up to 4.5% or even 5% yield automatically, completely fee-free, with features that actually fit the way we live and spend. No corporate jargon. Just the raw, optimized blueprint. First, let's look at the psychology here. Why do traditional banks treat high-yield savings like a premium secret? Because their entire business model relies on inertia. They count on you being too busy or too intimidated to switch. Look at this data point. Millions of young adults lead billions of dollars in accounts earning practically zero interest, while the banks lend that exact same money out for 7% to 15% profit. It's the ultimate arbitrage. But fintech flipped the script. They don't have thousands of physical branches to pay for. They don't have legacy infrastructure from the 1990s. They pass those massive savings directly to you in the form of high APY and zero monthly maintenance fees. It's not magic, it's just efficient code. Let's build your automated money stack. Here is the exact 3-step framework to pick the right fintech hub. Step 1, the liquidity and yield test. You want a fintech app that offers a high-yield wrapper around an everyday spending account. Look for platforms offering at least 4% APY with absolutely zero lock-in periods. Your money needs to be liquid so you can deploy it instantly. Step 2, the automated micro-saving friction. Let's face it, manually moving money into savings sucks. The best platforms use behavioral psychology against your spending habits. Look for automated roundups. Every time you buy a coffee for $4.20, the app rounds it to $5 and puts that 80 cents straight into a high-yield bucket. You don't even feel it happening. Step 3, the cross-border multi-currency play. If you are freelancing, doing remote work, or traveling between hubs like Singapore, the US, or Canada, you cannot afford traditional foreign exchange markups. The ultimate fintech account must offer mid-market exchange rates and borderless multi-currency vaults. Now, here is the absolute plot twist that almost everyone misses when they jump into fintech. Yield as a marketing hook. High APY is great, but the real superpower of these apps isn't the interest rate, it's the psychological separation of your capital. When you use a traditional app, you're spending money and your savings live under the same roof. It's a constant cognitive temptation. The moment you move your financial baseline to a dedicated, automated fintech ecosystem, you create a digital firewall. You aren't just earning 4.5% on your money, you are training your brain to live on less while your future self grows wealthy on autopilot. That mental shift is worth way more than any interest payment. The era of letting traditional institutions profit off your financial inertia is officially over. Check the description below for the exact breakdown of the top-tier fintech apps available in your region right now. Let me know which app you're currently using, and if you want to know exactly how to invest that saved cash completely automatically next, click on this video right here. See you there. And if you want to know exactly how to invest that saved cash completely automatically next, click on this video right here. See you there.